Welcome back to the ProTicker Podcast, your Wednesday morning edition covering major financial magazine headlines, everyone. Today, we're going to do a deep dive into some pretty fascinating market moves and predictions. We're talking about inflation worries, uh, whispers of a Fed rate cut, some pretty wild gold forecasts, and even a shakeup in the race for robo-taxes. Ready to untangle this financial web?
Let's do it.
Okay, perfect. We've got scoops from Bloomberg, CNBC, the Wall Street Journal, Market Watch, and even Barron's to guide us today. Buckle up.
Sounds like a lot to cover.
It is. So let's start with what's on everyone's mind. The Fed's interest rate decision next week. Bloomberg says bond traders are practically glued to the upcoming inflation data because it could be the deciding factor on whether they cut rates or hold steady.
Yeah, a rate cut isn't a sure thing even with so many traders betting on it. We need to remember that the November CPI report, that's the Consumer Price Index, which measures inflation, is going to be crucial. A surprise jump in inflation could make the Fed pump the brakes on easing, especially since some officials already hinted at a more cautious approach last month.
So we're talking about a potential plot twist in this economic drama.
Exactly. And MarketWatch even dug up some examples of the Fed seemingly dropping hints through the media during their pre-meeting blackout period, when they're not supposed to be commenting on policy.
Is that even allowed?
It's a bit of a gray area, but it highlights the immense influence the Fed has. Even a subtle signal from them can send ripples through the markets. And speaking of signals, don't forget, the Fed is also releasing their economic projections next week.
You mean that dot plot thing everyone keeps talking about?
Precisely. The dot plot visually represents each Fed official's prediction for future interest rates. Think of it as a sneak peek into their collective thinking about where rates are headed, not just for the rest of this year, but all the way through 2025.
So it's like a roadmap for the economy.
Yeah.
And everyone's trying to decipher the Fed's intentions based on these dots.
You got it. It's high-stakes poker, and the stakes are the entire U.S. economy.
High stakes indeed. And speaking of high stakes, Bloomberg reports that economists are predicting a fourth straight month of solid price increases. Could inflation be back to haunt us?
That's the big question looming over everything right now. What we're seeing is a tug of war between forces pushing prices down, like the easing of those supply chain issues we've all been dealing with, and potential new drivers of inflation.
Like what?
Well, MarketWatch points out that some businesses are already factoring in potential tariff hikes from a Trump presidency into their pricing strategies.
So would Trump win? Could supercharge inflation? What does this mean for someone who's, say, trying to buy a house or a car?
It means planning for the future just got a lot harder. A surge in inflation erodes your purchasing power, making those big-ticket items even more expensive. It's a really complex picture, not a simple answer.
Okay, so inflation is a bit of a wild card right now. But what about gold? Goldman Sachs thinks it could skyrocket to $3,000 an ounce by the end of 2025. MarketWatch says it's possible even with a strong U.S. dollar. How could that be?
What's fascinating is that Goldman Sachs isn't basing this prediction on a weaker dollar, which is usually what drives gold prices up. They're pointing to the Fed's actions, particularly those potential interest rate cuts we were just talking about. When rates go down, it often makes gold more attractive as an alternative investment. And CNBC also highlighted how all the geopolitical tensions around the world are adding fuel to gold's fire. It's like the ultimate safe haven in a world full of uncertainty.
So gold is like the financial equivalent of hiding under the covers when the world feels scary.
You could say that. Gold tends to shine brightest when the world feels shaky. The situation in the Middle East, the political drama in South Korea, all these factors make gold look pretty appealing right now.
Plus, if CNBC is right about those central banks buying more gold to stabilize their currencies, it could really push prices up, right?
Exactly. It all creates a fascinating dynamic, where uncertainty in one area of the global economy can have a ripple effect on something like gold, which is seen as this timeless store of value.
I'm starting to see why people get so obsessed with gold. But let's shift gears for a moment and talk about self-driving cars. Barron's dropped a bombshell. GM is restructuring Cruise, their self-driving taxi unit, and pulling back from the robo-taxi market. It's a big departure from those futuristic driverless dreams.
It definitely raises an important question. Is the autonomous vehicle bubble bursting? Developing this technology is insanely expensive, and even giants like Waymo and Tesla are pouring billions into it. GM's move might signal that profits are still a long way off.
But Barron's also points out that GM isn't completely abandoning autonomous driving, right? They're just refocusing on improving driver assistance systems, things like automatic emergency braking and lane keeping.
That's right. It's a less glamorous approach, but it could be more profitable in the short term. They're betting on making regular cars safer, which could benefit everyday drivers like you in the long run.
So instead of hailing a robotaxi anytime soon, we might just have cars that are much better at avoiding accidents.
Exactly. It's about finding that balance between pushing technological boundaries and delivering practical solutions that make a difference in people's lives right now.
Makes sense. While we wait for those robotaxis to arrive or not, let's turn our attention to Singapore. The Wall Street Journal reports that economists are more optimistic about their growth in 2024, with a new projection of 3.6% expansion. That's pretty impressive considering all the global economic uncertainty we've been discussing.
It is. They're citing strong manufacturing performance and robust consumer spending as the key drivers. It seems like Singapore is weathering the storm quite well.
What's their secret? Why are they doing so well when other economies are struggling?
The Wall Street Journal highlights a few key factors. First, their economy is highly diversified, which helps to spread risk. Second, they've invested heavily in education and infrastructure, creating a very business-friendly environment. And third, they have a stable political system and a strong commitment to free trade. It's a pretty solid recipe for economic success, and it shows that even in uncertain times, smart policies and a focus on long-term growth can pay off.
That's encouraging to hear. Now let's jump over to the world of cryptocurrency, which seems to be constantly making headlines. Bloomberg tells us that Circle, the company behind the USDC stablecoin, is joining forces with crypto exchange Binance.
This is a major partnership in the stablecoin space, which is all about digital currencies that are pegged to the value of something stable, like the US dollar.
So why is this a big deal?
Well, this move aims to boost USDC usage at a time when its rival stablecoin Tether is facing some scrutiny and gaining ground. With Binance's massive user base, this could really shake things up.
It sounds like the stablecoin landscape is becoming increasingly competitive.
Yeah.
Speaking of competition, Bloomberg also revealed that Wall Street's commodity traders are facing their worst year since before the pandemic.
It seems those wild price swings that boosted their profits are calming down. The commodity market can be a roller coaster, but right now the ride is getting a little less bumpy.
But didn't those price swings come from global events like the pandemic and the war in Ukraine? Does this mean things are calming down globally?
That's one interpretation. It could be a sign of more stability in commodity prices, which could ripple throughout the global economy. Or it could be that traders are simply getting more cautious as the economic outlook gets murkier.
So it's too early to tell if this is a good sign or a bad sign for the global economy.
Exactly. But it's definitely something to keep an eye on.
Good point. Now let's wrap up this section of our deep dive with some news about Ripple, the company behind the XRP cryptocurrency. Barron's reports that they just got approval for their stablecoin RLUSD from the New York Department of Financial Services. What does this mean for Ripple and XRP?
This could be a big win for them, especially if it attracts more users to their payment platform. Regulatory approval is crucial in the crypto world, and this win for Ripple could signal growing acceptance of cryptocurrencies by mainstream financial institutions.
That sounds like a positive development for Ripple and for the broader crypto market. We've covered a lot of ground already.
Yeah.
But there's even more to unpack. Remember that Bloomberg article about bond investors and the Fed? There's a quote in there that really stood out to me.
You're talking about John Madzire, a senior portfolio manager at Vanguard, right? He said, this time around, CPI is more important than the payroll data.
Yeah, that's the one. Why would he say that?
Because he believes the recent job figures have been skewed by those hurricanes and the massive labor strikes we saw. Those are huge events that can temporarily distort the employment picture, making the CPI a more reliable indicator of the economy's true health.
So he's saying we need to look beyond the headlines and dig into the underlying data to get a clear picture of what's really going on.
Exactly. And it reinforces the importance of that upcoming CPI report. It could have a huge impact on the Fed's decision and ultimately on your investments in the economy as a whole.
Yeah, it really does highlight how crucial it is to understand the data behind the headlines. Speaking of things that are often misunderstood, remember that Bloomberg article about the Fed's pre-meeting communication blackout period?
You mean when they're supposed to be silent about upcoming policy decisions? Exactly. Well, MarketWatch actually found instances where the Fed seemed to drop hints about their intentions through media leaks, even during this blackout.
Wait, so they're playing a bit of a PR game even when they're supposed to be quiet?
It certainly appears that way. It underscores the immense power the Fed has. Their words carry weight even when delivered indirectly. Understanding their communication strategy is just as important as deciphering their economic policies.
It's like trying to read between the lines of a very important, very cryptic message.
That's a great analogy. And speaking of reading between the lines, let's go back to that discussion about inflation for a moment.
You mean that potential tug of war between disinflationary forces and new inflation drivers?
Precisely. Bloomberg also mentioned the potential impact of President-elect Trump's policies on inflation. It's something we need to consider.
Right. MarketWatch pointed out that some businesses are already bracing for higher tariffs and factoring those costs into their pricing strategies. Could that really supercharge inflation?
It's definitely a risk. Remember, President Trump's policies tend to favor economic stimulus, which can boost growth but also push prices higher.
So it's a bit of a double-edged sword.
Exactly. And Bloomberg's article noted that economists expect core goods prices to rise for a third consecutive month in November, driven by things like used car and apparel costs.
So if those predictions are right and President Trump's policies do add fuel to the fire, could we be heading for a period of significantly higher inflation?
It's a possibility we need to be prepared for, and it underscores why the Fed is watching the inflation situation so closely. Their decisions on interest rates will have a big impact on how this all plays out.
Speaking of things that could have a big impact, let's revisit that eye-popping gold prediction from Goldman Sachs. $3,000 an ounce. By the end of 2025, that's a number that's hard to ignore.
It's a bold prediction for sure. But as CNBC highlighted, geopolitical tensions are a major factor driving gold prices right now.
Makes sense. Gold is seen as a safe haven asset, especially during times of global uncertainty. And with everything going on in the Middle East and the political situation in South Korea, it's no wonder investors are flocking to gold.
Exactly. When the world feels shaky, people look for stability. And gold, with its long history as a store of value, provides that sense of security.
It's like the financial equivalent of comfort food. When things get tough, you reach for what you know and trust.
I like that. And remember, CNBC also pointed out that central banks might increase their gold buying to stabilize their currencies if the dollar keeps rising. That could add even more upward pressure on prices.
So between geopolitical uncertainty, potential central bank buying, and the Fed's actions, there are multiple forces that could push gold prices even higher.
It's a confluence of factors that make this Goldman Sachs prediction seem a bit less outlandish, even if it's still a bold call.
Okay, I'm starting to understand why gold is having such a moment right now. But while we're on the subject of assets that are performing well, let's talk about Ripple and their big regulatory win.
Ah, yes. Their stablecoin RLUSD just got approved by the New York Department of Financial Services, as reported by Barron's. That's a huge step for them.
It is. Barron's suggested that this could be a major catalyst for XRP's price. Do you think that's likely?
It's definitely possible. Regulatory approval is a major hurdle in the crypto world. This win could signal growing acceptance of cryptocurrencies by mainstream financial institutions, which could attract more users to Ripple's payment platform and drive up demand for XRP.
So it's not just about the stablecoin itself, but what this approval represents for Ripple's overall position in the crypto market.
Precisely, it's about credibility, legitimacy, and the potential for broader adoption.
It seems like uncertainty in the global landscape is driving a lot of these market moves. Investors are looking for stability and safety, whether it's in gold stablecoins or even those driver assistance systems we were discussing earlier.
You've hit the nail on the head. When the future feels unpredictable, people seek out things that feel solid and reliable. It's a natural human response.
And it creates opportunities for those who can anticipate these shifts in investor sentiment and market dynamics.
Absolutely. Speaking of shifts, remember that Barron's article about GM restructuring their cruise unit and focusing on driver assistance technology instead of robotaxis?
Yeah, it was a surprising move. It seemed like they were all in on self-driving taxis just a few months ago.
They were, but as Barron's pointed out, the self-driving car market is becoming incredibly competitive. With companies like Waymo and Tesla spending billions on research and development, it's a high-stakes race to see who can perfect this technology first and bring it to market.
And GM seems to be betting that making regular cars safer is a more achievable goal in the short term.
Exactly. It's a more pragmatic approach. They're acknowledging that the path to fully autonomous vehicles is longer and more complex than perhaps they initially anticipated. So they're focusing on delivering tangible benefits to drivers today while continuing to invest in the future of self-driving technology.
It's like they're saying, we still believe in the long-term vision, but let's focus on what we can achieve right now.
Precisely. And it's a strategy that might make sense for other companies in this space as well. The race to autonomy is a marathon, not a sprint.
Well said. Now let's turn our attention to Singapore's impressive economic outlook. The Wall Street Journal reported that economists raised their growth forecast for 2024 to 3.6%. That's remarkable, especially considering all the global headwinds we've been discussing.
It is, and the article attributes this success to a few key factors: a diversified economy, heavy investment in education and infrastructure, and a stable political system with a commitment to free trade.
It sounds like they've created a very resilient and adaptable economy. Are there any lessons other countries can learn from Singapore's success?
Absolutely. Singapore demonstrates the importance of long-term planning, investing in human capital, and creating a business-friendly environment. They haven't been immune to global challenges, but their strong fundamentals have allowed them to weather the storms more effectively than many other nations.
It's an inspiring example of how strategic policy decisions can lead to sustained economic growth. Speaking of economic trends, Bloomberg reported that Wall Street's commodity traders are having their worst year since before the pandemic.
Yes, it seems the volatility that fueled their profits in recent years has subsided. The article suggests that supply chain disruptions and price swings related to the pandemic and the war in Ukraine have largely calmed down.
So are we seeing a return to a more stable and predictable commodity market?
It's too early to say for sure, but the decreased volatility could be a sign that things are settling down. On the other hand, it could also reflect growing caution among traders as the global economic outlook becomes more uncertain.
It's like the calm before the storm.
Perhaps it's a situation that warrants close observation. After all, commodity prices affect everything from the cost of food and energy to the performance of various industries. Their movements can have ripple effects throughout the global economy.
Right, a spike in oil prices, for example, could lead to higher transportation costs, which could then push up the price of consumer goods. It's all interconnected.
Precisely, and that interconnectedness makes it even more crucial to understand the forces driving these changes in the commodity markets. It's not just about traders' profits, it's about the potential impact on your wallet and the global economy as a whole.
Well said. Now, before we wrap up this part of our deep dive, let's circle back to the world of stablecoins and that interesting partnership between Circle and Binance that Bloomberg reported on.
Ah, yes, the battle for stablecoin dominance. It's a fascinating development, especially with Tether, the current market leader, facing some scrutiny.
Exactly. Circle's emphasis on compliance and transparency, combined with Binance's massive user base, could really shake things up in the stablecoin market.
It's almost like a clash of philosophies. Tether with its first mover advantage, but questions about its reserves versus USDC, which is positioning itself as the more trustworthy and transparent option.
It's a classic underdog story. Will users stick with the established player despite the risks, or will they flock to the newcomer that promises greater stability and accountability?
It's a question that has implications far beyond the crypto world. It touches on fundamental issues of trust, transparency, and the evolving landscape of digital finance.
It's a reminder that the financial world is constantly innovating and evolving. What seems like a niche development today could become the mainstream tomorrow.
Exactly, and that's what makes following these trends so fascinating. We're witnessing the birth of new industries, the reshaping of old ones, and the constant interplay of technology regulation and human behavior.
It's a lot to keep up with, but it's definitely an exciting time to be watching the financial world unfold.
I couldn't agree more. And speaking of exciting developments, we still have a few more headlines to explore, including some insights into the changing dynamics of the commodity markets and the potential impact of sustainable energy on trading trends.
That sounds intriguing. I'm eager to hear your thoughts on these topics. Let's dive in.
Okay, so let's talk about those commodity markets. You know that Bloomberg article about Wall Street's commodity traders having their worst year since before the pandemic?
Yeah, the one where they said it's because things are less volatile now, right?
Right, exactly. Remember all those price swings we were talking about, after the pandemic and the war in Ukraine?
Yeah, it felt like every day there was a new record high or a new record low.
Exactly. Those were unprecedented times with supply chains in disarray and geopolitical tensions soaring. But now that those factors have begun to settle, we're seeing more stable commodity prices.
Which means fewer opportunities for traders to make those big bets and rake in the profits.
Exactly. When the highs aren't as high, the potential for profit shrinks. And it kind of makes you wonder if this period of relative calm is just temporary or a sign of a more fundamental shift.
Yeah, good point. Especially with the whole world transitioning to renewable energy.
Right. Exactly. That's going to have a huge impact on commodity trading in the long run. I mean, as the demand for oil and gas declines and the demand for those metals used in solar panels and EV batteries rises, we're going to see some pretty dramatic shifts in the market.
So commodity traders who want to stay ahead of the curve need to adapt to this new reality.
Absolutely. They need to understand the forces driving these changes and adjust their strategies accordingly.
And speaking of changing dynamics, we can't forget about Ripple and their recent regulatory win with the RLUSD stablecoin.
Oh, yeah, it was huge.
Barron's even suggested that this could be a major catalyst for XRP's price. What do you think?
Well, I mean, it's definitely possible. Regulatory approval is a major hurdle in the crypto world. And this win for Ripple could signal growing acceptance of cryptocurrencies by mainstream financial institutions, which could lead to more users for their payment platform and a higher demand for XRP.
So it's not just about the stablecoin itself, but what this approval represents for Ripple's overall position in the market.
Exactly. It's about credibility, legitimacy, and the potential for broader adoption.
It's like the Wild West of crypto is finally starting to get some law and order.
Haha. Yeah, something like that. And it'll be interesting to see how this battle between Tether and USDC plays out. Will users stick with the established player despite the risks, or flock to the newcomer that promises greater stability and accountability?
It's a classic underdog story.
It is, and it highlights how quickly things can change in the financial world. What seems like a niche development today could be the mainstream tomorrow.
It's a lot to keep up with, but it's also what makes it so exciting.
Couldn't agree more.
Well, we've covered a lot of ground today, from inflation jitters to gold predictions to self-driving cars to stable coins. It's been a whirlwind tour of the financial world.
It has, and it just goes to show that even in times of uncertainty, there are always opportunities out there.
As long as you know where to look.
Exactly.
Well, that's all the time we have for today's deep dive. Thanks for joining us, everyone. We'll see you all tomorrow morning with fresh headlines from the major financial magazines.